Thank you for the opportunity, Mr. MC, Director of Ceremony. Good day to us all. I'm not sure if I have the most difficult task to engage you last. To engage you just before lunch, so to be between you and your lunch. As you've been through a long, resourceful morning, or to be granted 45 minutes to engage you for both debate and interaction, but I trust that we will grant each other the required attention and span of time to get through the topic. The perfect storm is indeed here. How does it affect us, the retirement fund industry, and how do we navigate it? With respect to the umbrella funds and standalone funds, and specifically with the favour standing on our doorsteps. Klaus Laborn and Coetzee will engage us on the umbrella funds and standalone funds, respectively. Through that, I'll call it a consultative debate. I know we said we've been agreeing all the time. I've seen the presentations. We're not going to differ too much. What is there to differ on when you're talking about facts? I'll allow them to take it from either perspective, although with Klaus, I know we're focusing on the umbrella funds specifically. Both are qualified in financial planning, amongst other things, and equally very experienced in the retirement fund management, and are serving as independent principal officers of respective retirement funds. Collectively, it is before lunch, so while you're still listening to us, we'll bring to your attention what we're going to be looking at. They're going to tell us where we are coming from with the respective umbrella and or standalone funds, give us an introduction in the background into the respective market. We'll define what the type of funds mean. We tend to assume, but sometimes when you are around the table of discussion, not debate necessarily, you realize that we do need a few facts on the matter. How the funds are structured, skills required to manage a fund prudently and ensuring compliance, touching on favour, that's the new kid on the block, and the type of retirement fund we manage. So how will favour impact the type of retirement fund that we're going to manage? Funds are legal entities. What do we mean by that? So they'll touch on that for us. Benefits for the umbrella funds, benefits for the standalone funds, management structure of the funds, I think we repeated that, investment choices, risk benefits, flexibility, costs, service providers, and other selection criterion when it comes to the topic of the day. So with that said, I'll allow you, Klaus, to take us forward and bring us what you have to offer us.
In joining an umbrella fund, and then has the opportunity to focus on its core business, because there's a board of trustees appointed and a professional board of trustees to the umbrella fund, and so they can focus on that their tasks as a business, and so that's the advantage of belonging to an umbrella fund. And as I mentioned, also costs of an fund are quite substantial. You have audit fees, you have administration fees, you have compliance fees, and we see with FEMA coming more and more in terms of compliance fees. So you have a larger base where we can share the costs with each other. And the focus also then employers concentrating on their business. There's obviously an opportunity for an umbrella fund to establish a management committee. Ultimate responsibility obviously lies with the board of trustees, but there is an advantage of having a management committee established for a participating employer, because they're the closest to the members. They understand. So the conduit, the between the board of trustees and the members. So they look at the designing and what they would like to offer. Whilst the board of trustees takes fiduciary responsibility at the end of the day, and that responsibility is shifted away from the employer to a board of trustees. Hence, yeah.
Okay, and on the management committee, they would usually make decisions at the fund level, but not necessarily over the whole fund when it comes to an umbrella fund. Do you think they are involved enough? Have they abdicated any duties in order for them to pass it on to the board?
As I mentioned earlier, I think at the end, the fiduciary duty and the final responsibility lies with the board of trustees. So they will have limited powers in terms of decisions that they will make. Mainly, they will look at, as mentioned, discussing with their members and with as employer what benefits do they want to offer, and then consult with the board of trustees through their consultants how they can finance that and what can they put in place. So we find, and I found it in Umbrella Fund where I'm a principal officer, so you have some very active management committees, and then you have even companies that don't even have a management committee, but they then are rather on the smaller side. And what's also important, that management committee is also the educator, helps the board of trustees educate the members. So it is an advantage to have a management committee in place rather than not to have. So yes, there are some rules and regulation with the maker will have to abide to, in terms of also from the rules and in terms of the Pension Funds Act, and then obviously going through to FEMA. And within that scope, they can make decisions which then can be approved by the board of trustees.
Just one more. We tend to talk about funds being legal entities. Funds belonging to a company, yet they are legal entities on their own. How does this work for an umbrella fund?
Yeah, so umbrella fund is actually in the same. It's nothing different than like you said, you for NAMPORT, you're the principal officer. That fund is registered as a legal entity with no FISA and also approved by NAMRA, as we call it now. The same as with an umbrella fund. A legal entity is either registered as a pension fund or provident fund with NAMRA, but also registered as a fund with no FISA.
And in the case of an umbrella fund?
Exactly. So it's an umbrella fund, and what then happens is that you have general rules of an umbrella fund, which govern the umbrella fund, and then each participating employer will have special rules, what we call special rules, that govern that umbrella fund.
Okay, benefits of the umbrella funds, what would you pull out as the priority?
In terms of benefits, the advantages
of having an umbrella fund versus a standalone?
Yeah, I think, as mentioned before, that is firstly that the employer can concentrate on his day-to-day business, and also that they share in, because a pension fund, as I mentioned, has certain costs. The board of trustees, selling fees, your principal officer fees, some are non-remunerated, but you have audit fees, you have your actuarial fees, and because of the size of an umbrella fund, you have you have economies of scale, which benefits each individual member.
Thank you. Jan, welcome to the team, welcome to the platform. Would you kindly take us through what you have to offer us?
Thank you, Arthur. Hello, Klaus and the audience. I hope you can hear me well.
Yes, we can.
So in terms of the this discussion, I said to a colleague of mine this morning, it's almost like comparing two Mercedes Benzes. One is a station wagon and one is a convertible. So I'm speaking on behalf, and I represent both as well, an umbrella fund and a private fund. So there's cases for both, and you should look where you would fit in best and what would be more appropriate for the employer group. So, like Klaus said, it's a separate legal entity from the company, and the umbrella fund is sponsor driven, where it's a separate legal entity created in a in a set of master rules. Then all your participants would slot in underneath as participating employers. The interesting thing there is that companies delegate their responsibility to take over the retirement fund provision in an umbrella fund, but they can never applicate that responsibility. So there's a big debate, and probably FEMA will play a huge role in it to ensure that that is kept forward. And FEMA is probably a good thing for the industry and for the retirement funds, because you will be held accountable, which is the correct thing. Because ultimately your trustees, whether it's a private fund or on umbrella fund, manages money for people who must retire. And that must be done responsibly and in the best efforts to see that the outcomes, the objectives of the members are met. And it has been said this morning, a number of times you would like a good outcome for the members of your fund, depending on various factors like investment returns and the strategies going into retirement to ensure that people have a comfortable retirement. So, as I'm speaking mostly about the standalone funds, the benefit specifically for a standalone fund is one of the key criteria is you must have scale. If you don't have scale, then cost will kill you. So what I mean with cost kill is that if you look at the history of retirement funds in Namibia, you had a scenario where when I came back to Namibia from the Cape, I worked for a company, Sanlam, and at that time the GIPF even was administered by Sanlam. The administration service was provided. So all companies who had pension funds, either had pension funds with Old Mutual or Southern Life or Sanlam, and that was an underwritten fund. But the underwritten fund was actually a policy of insurance, and had a lot of drawbacks because your investments were provided by that specific company, your risk benefits and your administration, and that was not necessarily the best of what was available in the market. So perhaps one various asset managers, because they were not linked to specific product houses like insurers, and they had a lot more choice in terms of risk-benefit selection, because the whole market lied open to them. That also gave way for consultants to advise them on what to do, who's the best. So the whole market evolved significantly over that time, and you saw consultants coming into it, other specialist administrators, more independent valuators, not valuators representing insurance companies anymore. And as a result, that is a good evolution. But out of that, a number of those companies were just technically too small to stay private funds. And that created a transfer to the umbrella funds. And even small startup companies moved into umbrella funds because the vehicle was rightly priced for them. cost is shared amongst participants. It makes economical sense for them to apply part of their contributions from the employer to purchase into basically a product. And most of the umbrella funds, and I must say as well, all umbrella funds are not equal. Some are ran by insurance houses, life insurance, and others are private. So you will find various different types of, and with different approaches in how they run it. Some with lots and lots of choices, some with lesser choices, but there would probably be a room for each one. It's up to the participating employers to see where they would like to be in that. From a private fund perspective, if you have scale, and that is very important. If you don't have scale, don't try to put up a privately administered standalone fund, because the cost will basically dilute your net replacement ratio in terms of your net savings ratio, which you transfer to the members of the fund. Just open something up here. So what I'm trying to say is that private funds offer specific benefits for participants that needs to or can be in that space. So for instance, on your legal stuff, your rules, an employer who starts off a private fund can set up their rules to fit these company specifics like it's like a glove to your hand. They can design their rules so that it fits specifically their entity and their entity only. Whereas if in an umbrella fund, your master rules are sometimes you need to create them wide because you want to cater for various people in an audience. All companies don't like the same. For instance, a simple thing like housing loans. Some companies don't like housing loans or umbrella funds, and some do. But in a private fund, you can set up your stuff like fitting like a glove, and as a result, that provides you with a specific goal-driven vehicle. So you know that this was set up for a specific purpose, and that fits the benefits as well. And secondly, in the control, your board of trustees, and let's say we are talking about 200 to 300 million of assets at least to start looking at a standalone fund, because then you start to get the economies of scale in that. One of the key advantages of the standalone fund is that the control appoint specialists in the field, and some of the private funds costs. If you look at costs compared to umbrella funds, your umbrella funds normally appoint professional individuals to form your board, but they need to be paid. They must be paid. Where in a private fund, the position can be that the company says, you are an employee, and as a result of that, we will not pay you, which I think is a great way to go about it, because you are employed by that specific entity. And therefore, you can still make a saving there. In terms of your risk benefits, between the umbrellas and the standalone funds, it differs from provider to provider, but a private fund can structure their risk benefits like they want to. They can either house it on employer-owned policies, or they can house it in the fund, wherever they would like to. With various tax benefits going forward after it, and a lot of other considerations. But umbrella funds are more limited in terms of what it can offer. Firstly, in the structure of benefits, because Klaus mentioned he works for a retirement fund with a huge number of members, and your average participant is probably less than 100 or 200 to 100 or less people. A number of small funds, and they are limited into what the main board allow them to do a selection of. If an umbrella fund opens up to you can have what you want to, it will cost them money. You can add this option, but the option costs money. Going forward, if you want a sunroof, it costs money. If you want flexible risk, it will cost you money. If you want individual member choice, it will cost you money. If you want to make specific multiple choices to move in a specific year, the sponsor of that umbrella fund must charge you a cost. So in a standalone fund, it's negotiation between the board and the administrator. So it's not the number of participants belonging to an umbrella fund with various different choices, depending on what you allow them, can add layers of cost which the participant to that umbrella must understand. Because everybody wants everything, but you need to basically figure out what is practical and what is justifiable in terms of the cost you are paying for it. So private funds, very simple to arrange that things. In terms of communication will become a big thing with FEMA, and it's also one of the things I like, and I like the FEMA responsibility on boards to firstly communicate responsibly and accurately to their members, and secondly, communication strategies and is education. In the current scenario, and let me say it, in Namibia, we are in a fairly young retirement provision stage. So we're talking, most of the funds started off after independence. That's the area in which we're living. So we don't have retirement funds who are hundreds of years old. So we are fairly young in that. And the member knowledge is also limited as a result of the demographics of our population. Some people are educated, some people are long-time employees for various companies, but not necessarily educated and specifically financially literate in understanding things. So in a standalone fund, and probably similar to a retirement umbrella fund as well, you can create various smart strategies in a communication plan, which I think the emphasis by both should be financial literacy education is almost the entry level of making a person understand complicated things like projection statements and benefit statements, where the fund tries to lead the person into making progressive, smart investments for his own destiny after retirement. So that to me is very important. I prefer the standalone fund perspective here, because you can be specific and you deal with only your type of employee. So in umbrella funds, you'll find various participants from various economic sectors in society. So if I have a financial advice company or a small brokerage house, the communication message to them must be on a different level to when you prepare communication for a number of laborers in a building company or for people in a general manufacturing environment. So from that perspective, communication in a standalone fund is a lot more simple. And because it's more complex in an umbrella fund, there's a cost element to that going forward as well. So that will fill in a layer of cost. So general communication from the main board can go up, but then you will have probably in most of the umbrella funds, there would be a consultant who would require fees to set up those communication sessions, etc. But all costs, like I said previously, comes down to the bottom line. And that's the net savings ratio for the member in that. And that's, communication unfortunately is very important. You cannot get past that. Let me quickly look here further what I wanted to say. In terms of investment structures, and there I must say, I think umbrella funds do quite well to try and establish various routes of investments, normally on a platform or a life stage, or choices to specific avenues of investments. The difficult part is running unlisted in an umbrella fund, because you can have funds, if you participate equally in that. When a fund liquidates, it can be an issue to liquidate all the assets because they were holding assets in there as well. On a standalone fund, your investment is fairly simple. In simple meaning that you can select what you want. You can build portfolios which is suitable to your fund specifically. Specialist strategies, you can use platforms, etc. And if you compare it to a medium size, let's say we're talking about a fund with 150 million participating in umbrella, their choices will be limited to what the board allows them to do. So if they would like to go into a specific avenue from a management committee perspective, the board can veto them for various reasons, whether they would allow it or not allow it. So on the investment side, I prefer the open arena or a standalone fund, but umbrella funds can pretty much offer very similar structures. One of the disadvantages of umbrella funds is when you get a big employer with big assets coming into the umbrella. And by saying that is, say for instance an umbrella fund has 4 billion of assets. And now you attract a employer group who would like to participate, whatever reason, in a umbrella, but they have 2.5 million of assets. So the whole structure of the umbrella fund, because we are fairly small, we're not the big entities as in SA or the rest of the world, the whole umbrella is skewed towards this one participant. So you would basically say that 60%, one client is basically 60% of everything, and if you split out the bigger ones, you have very limited groups in that whole investment structure on the fund. So, yeah, and the smaller funds will automatically be limited in the type of investments they can go in. I just need to, I see our time is basically going up. Flexibility, umbrella funds for me, awesome flexibility. Standalone funds can be structured like they would like to structure it. Just in terms of the costs, cost there will always be in umbrella fund is administration, consulting, risk benefits, commission. I like the private fund structure where you can ask the insurer to waive your commission, which they can probably do as well, but there's consultant involved. So there might be other reasons not for waiving the commissions, because it's income as a result of the work they do. Firm will remain, and I just think it's a step up for most of the funds to ensure that proper communication is delivered, that the funds are run professionally and correct for the benefit of the whole economy and their own specific members, and determine or to basically target a good outcome in retirement for that specific people. But like I said, if in choices, I could quickly bring it to my last thing, last two comments, is cost cannot be your only criteria in selecting either a retirement umbrella fund or a private fund. There are other qualitative aspects which should be taken into account, and these include the accuracy and consistency of communication, report backs to your specific groups. And like I said, my view is that an umbrella fund is a lot more difficult to do that as a result of the reasons I've given. Then the administrative competence. In an umbrella fund, you're basically linked to administration services of the sponsor, which might not be the best. In all cases, some administrators are just better than others. And if that administrative competence is not up to standard, it might require due diligence review, and it's quite difficult to move from funds, and I think it will become more difficult going forward, or the perception would be that it's more more difficult. So then also the level of transparency, and that is coming through from your board specifically, and then on your service provider as well. Cost, your fees, and the performance of the asset manager specifically, and the feedback given through to your specific participants. On a private fund, it's fairly simple. You can set up investment subcommittees and run that through and give proper feedback through to your board going out as well. And then also the ease of functionality. So umbrella funds tend to have very strong umbrella funds with various electronic communication, which is very good. Private funds, you don't necessarily need to have that because you're dealing with just one fund. And then you have the makeup of your board of trustees. So for instance, if I join an umbrella fund and I don't like the trustees, I can basically do nothing about it, besides selecting another provider. But in conclusion, it depends for me where you are. If you can set up a private fund, you need to take into account the benefits thereof and the negatives as well. So the compliance, the specific trustees training which you need to provide on a private fund, where you deal with mostly a professional board on the main umbrella. And then the fiduciary duties basically remain the same. And I try to say you must do a due diligence in the market, decide what would be most cost effective, be for a specific employer, and to provide a specific outcome which you are targeting for your employees. That was enough.
Thank you, Jan. I expected a lengthy contribution. I had the privilege of seeing your contribution. You've touched on FEMA. We will move into the question part so that we can also give our audience a chance, but I'll put one very briefly to you. You've touched on FEMA. We are focusing on FEMA as funds in the market at the moment. You've chosen the standalone as preference, as you indicated. What would you actually recommend in terms of the suitable type of fund to be in with the FEMA coming up? And just a second.
A result of shortcomings in the environment, like the BF130. BF113 SA came in a couple of years ago to give guidance to funds on how to do certain things to provide a better understanding to members, specifically with communication, set up of boards of trustees. So, in terms of how I see FEMA, FEMA is also giving better guidance than what the current Pension Funds Act and the small number of regulations have. So the playing path is a lot more clear under FEMA. And a lot of people shy away from the compliance because it's a lot of work and there's big fines and stuff. But I think that can always be mitigated. I think for the greater retirement funds industry or society amongst the number of funds, it is a good thing that you don't want an over-regulated environment. But I think if all the funds comply and they keep in the straits, we'll say a very different thing in 5 years. So that is my specific view. And FEMA will cost you, depending on how you split your costs. For instance, if I can ask the umbrella funds, the various umbrella funds, take the example of you're taking a fund into an umbrella fund which has 60% of the total assets and membership. I would like to see that calculation in sharing of costs across the balance of the other participants, because that would be fairly interesting. But the cost you will never be able to pass by. You will pick it up somewhere. So it depends. For me, the cost is not the only consideration. It is what fits you and what is in your long-term strategy. So I see there's a big move worldwide to umbrella funds specifically because it's perceived to be cheaper. But umbrella funds has limitations in terms of the flexibility of what they can offer. And the last one, you asked me what?
That was on the cost efficiency factor of the umbrella funds. Is it really real or is it a myth? Because so much is paid up and it's smartly broken down into the smaller portions, but you still land up paying extensively or intensively towards the services. So what's your view on that? I think we lost you, if you can hear us.
Beate, if I may, maybe recommend, excuse me, Jan. I just want to add, not on the cost layer, about people moving from in FEMA, and we see it in the market, a lot of more people considering moving from a standalone fund to a umbrella fund. And the remark was made already in the first day of the conference when one of the participants in the audience asked Kenneth, what about trustees' fees? And as Jan said quite correctly, at the moment, normally your standalone fund do not remunerate your trustees. But with FEMA, with the consequences of FEMA contraventions, and then we're looking at fines between 5 million up to 5 million and imprisonment of 10 years. I doubt that every employee who stands as a board of trustees is prepared to take on that risk, to sit on that board of trustees just because he's an employee. So whilst on a standalone fund, and I agree with Jan, it's not always all about cost, but over time, trustees' fees going forward, if members are prepared. I see an outflow of trustees taking on that responsibility and being able to be able to sit in prison for 10 years and stuff like that. So whilst umbrella fund, the board of trustees consists of professionals, they take an informed decision in serving on that board. They can't come and say, I'm not aware about these compliances and the penalties that could come my way. So they take an informed decision. So I think there is a merit in terms of moving to that umbrella fund because of that professional trustees. And you buy these yes, you buy, if I say you pay a sitting fees, a trustee fees for it, and you will have these kind of professionals, your risk officers, your legal people, you will have on the board of trustees. The important thing also, and what Jan also mentioned about is communication. And that's where I mentioned about the manco. There's still a responsibility by the employer to communicate to its members, not just because it's an umbrella fund means that they can abdicate that responsibility on communication. I'm also a principal officer of a standalone fund, and they also engage the consultants to help with their communication. So there is a two-way street. I mean, that's important. We can't, as an employer, just because we're an umbrella fund, totally ignore communication. And communication will become more and more important here under FEMA. As Jan correctly said, there's that communication policies and stuff like that. So there are limitations, obviously, in terms of umbrella fund. But I think FEMA will bring a major change around. And as Jan said, you need to have economies of scale. And there are pension funds in the market that will not have that economies of scale, and people being prepared to serve on these board of trustees. So I would see an outflux of that.
Thank you very much, Klaus. Let us move over to the audience.
The responsibility placed on boards of trustees. However, you just mentioned and said that employers cannot necessarily abdicate. The problem with that is at this point in time it's more of an ethical responsibility than a legal one. How do you foresee we can improve on employers not abdicating responsibility? So there is a management committee, but there's no provision in terms of the law to hold them accountable to a certain extent.
Yeah, Roman, I think the same comes for a private fund. There is no law that board of trustees is ultimately responsible for their actions, for what they do, for the decisions that they make. So even in a private fund, they can abdicate that responsibility, not talk to the employees. I fully agree with you. I think it's obviously in a standalone fund is that relationship, closer relationship in terms of the fund and its members, because it's at their heart. So it's in an umbrella fund, it's a bit of pervaded, what do you call it? removed. That's the correct word. It's a bit of removed, but hence that responsibility. It's more an ethical, but at the end of the day, if we in an umbrella fund, we have a board of trustees, we need to ensure compliance to these strategies. And so we can't just abdicate that responsibility to a consultant or we need to go and make sure for ourselves, also be visible to the members, to the companies as a board of trustees, and make sure that these, it's not going to be easy. I think we treading on almost new grounds, but in terms of accountability. But I think there's a lot of progress already in the fund, together with its service providers, take the hand of the participating employer to be effective. I hope it answers your question.
Thank you. I see a thumbs up at least. Can we take the next question? I think.
And I'll make a statement. Is the move to the umbrella funds not resulting in what the economists call an oligopoly? So that's now me being naughty, makes you think, because everybody is being pushed, and everybody that you are being pushed to offers the same service, probably at the same rate, or should be at the same rate. So that's now me being naughty. So my real question that I want to answer on is, has anybody done a calculation that can show, and I know Jan said we should not look at the cost, but myself being an economist, I look at the cost and it's ingrained in my brain. A pension fund, a small fund like mine, we do costs of less than 3%. Would umbrella funds be able to provide a cost reduction of up to 1% to these funds? Because ultimately any cost reduction, and some of the positives that were now promoted, is a reduction of cost because of economy of scale. But our earlier presenter said about the compounding thing. So if we get a reduction of up to 1% on the members' benefits or on the cost, that goes straight into your savings component, that means it already helps you down the line to pay your medical post-retirement. So that is my question in terms of umbrella funds. Will they be able to deliver a cost saving of up to 1 and even more % to really make it impactful for the standalone funds? Thank you.
So would you like to take that for us?
I think that promise will be very difficult to give you here and say, yes, I will give you 1% or 1.5% benefit. With FEMA coming, and I don't want to use FEMA as just an excuse. I think there are certain variable costs and there are certain fixed costs. And we will see over time that the fixed cost component of compliance in terms of FEMA, if we look at, for instance, financial statements now, they need to be prepared within 3 months after the year end. That will put additional time constraints, pressure on the service provider, and I would foresee that there is an increase of costs there. So in terms of the fixed costs like trustee fees and fidelity covers and stuff, I would foresee that because if you had more people coming in, that per member will decrease. But in terms of your variable costs, like your administration costs, that's not necessarily a guarantee But I found that currently there are requests by funds looking at moving, and there have definitely been cost savings for the members. I can't tell you if it's 1% or it's 2%, but definitely there's a cost saving, which will then eventually go to the benefit of the individual.
Thank you, Klaus. With that, and looking at our time, let me thank my presenters.
No. If umbrella funds are going to get more independence going into them, and my friend there mentioned artificial intelligence and blockchain and all of this. I once asked a service provider, we have moved from 40 people to 140 people. You still have the same system, you still have the same software. Why are we not getting reduced rates? And they said, no, we can have a check. You are making a very valid point. So again, I'm just coming to logic. My logic tells me, using the words that all of us have spoken, economy of scale, using artificial intelligence, software, hardware, we should be able to reduce the cost. But if the regulator was here, I would have asked him, dear regulator, have you done an analysis on what you are forcing us to become? And that takes me back to the naughty part. Is this not an oligopoly? Thank you.
Would you like to make another input?
I really truly hope not that it's going to be monopoly. No, there are enough umbrella funds that are in the market, and there will still be standalone funds. I mean, there are some with substantial assets, so I foresee that. And you're quite right, artificial intelligence administrators will need to make use of that more effectively, and by that reduce. But the important part is the saving that the member makes to the fund as well plays a much more bigger role. And we see it in the industry. That people, when it was mentioned in the conference, when you come to your job and you make a decision, you see the your employment contract, they talk about quickly pension, but then it says, how much do you want to contribute from your salary to the pension fund? You can decide 50% of my salary, 10%, 100%. The majority of people will place the lower. And then the board of trustees then comes to the administrator and service provider say, I want to cut in costs. Whilst if the member has chosen to, could have chosen 50% of my salary for contributions, that would have made a major impact. So I'm not denying the importance of costs, reviewing costs and working smart, improving
with the costs that we are charging. And just to touch on what you said, Dugout, the regulator at one of the recent industry meetings has indicated that they would like to sanction a study, any reduction or not. Again, I regarded that as the last